following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, 11 o'clock till noon Eastern Time at 877-927-6648. Get into this thing. Can't change a number because all of a sudden the repertoire gets changed. So we've got the S&P gaps down last night, 30 points. The Dow gaps down 300 points, opens, look at this, the E-minis opened down. It closes on Friday at 2067, kind of a so-so day, and then bam, vote is no, and you get the smash to the downside. Opens at 2037.25, goes down to 2034.25, right there, that candle. But wait a minute. It then starts in the Chapman wave at peak A, B, C, D. This is the 10-minute chart. It goes to 2046, round number, pulls back, goes sideways for a whole chunk of time. And then this morning, at about a 120, it starts a move that goes peak A, peak B, peak C, peak D, right there at a 161 retracement, goes to exactly 2057.25, 3:30 this morning. Goes sideways for a little while. Has a Chapman wave, right? Look, there are no technicals here. I use candlesticks only because it's easier to read and it also gives you a lot of information. I only need the tops and the bottoms of the candle. And it goes to a right shoulder failure pattern right there with the doji, and then a close at 2059.25 for 2 bars at 6 o'clock and at 6:10 this morning. Whoosh, it comes back down to 248.75 at 8 o'clock, and then it starts a move that goes peak A, peak B, peak C. And I was on air doing Tom's show, and I said there should be a D. Went to a D, and then it popped up and went above the gap low from 10 to 1 on the 3rd of July. And 10 to 1 must have been somewhere in the evening. Oh, no, just before the close, 1 o'clock, that's right. And then the close was at 1, well, whatever it is. So it gaps down, huge, and it fills the gap. It just fills the gap. It goes right to 20, can you believe it was at 2034 this morning, or last night. And now you're looking at a high that was made just 3 bars ago at 2070.50. That is huge. That is just a huge move down and up. But wait a minute. When you do that, it doesn't matter what the news is. There's a particular strain that's taken. First of all, it's a release of energy to the downside. So you've now usurped the downside energy. And now you're going up and you release that upside energy. And now you got to see the testing. So we've gone all the way to a 261 retracement in the Fibonacci expansion. And you're going to see exactly whether or not this is a market that had a reflex rally rebound, whether there's something substantive, and a whole bunch of things. And we'll talk about that as we move on, because we want to look at the dollar, we want to look at the euro, we want to look at the dollar pairs. You want to look at the bonds, the money flowing back into bonds or out of bonds. You want to look at candles. You want to look at a bunch of things. So thank you to John Logan for his show early this morning. Thank you to Larry Pesavento. And straight after my show, you've got Daryl Martin, you've got Steve Rhodes, you've got Dave White, you've got, well, I'm not sure who's sitting in for Tom O'Brien this afternoon. So programming all the way through. Now let's just have a look at something that's very important here. If I'm looking at the Dow, there's a large arch formation. And these patterns repeat over and over. Look, arch, cup, they just keep repeating. Except for one little thing. We've been making lower lows and lower highs. This bounce came at a most important moment. Why? Because it was just 12 points below the recent low right there on the 30th of June, went to 17,576, and this morning we went to 17,564. What's really important about this is that we're starting to test the 17,500s. I've been talking about to subscribers, and I had that webinar. Remember the match, the parallel match with 1920s, where we are in this particular move. And I had said that my belief is that we're matching 1929 perfectly, except you've got to put it into your mind that we are doing 1 day equals 1 week in our time. So it's not like this is the year of the 1929 crash. This is the year that started the match that should take us into 2016s. With higher highs. That's the way I'm looking at it. But at this particular point, there's a real good chance that we're going to make a full arch formation and test the 17,034 level. It's going to be really important. In between, you've got a pattern that I call, well, it's a standard technical pattern called the declining wedge, a little wedge formation. Right there, it's circled it, going to somewhere into the 17,440s. And that would be within about, by next week, I think it would be, yes. It would be by the week of the 14th of July. But in the meantime, we can have these little bounces, but a decisive close above 17,785, the 9-period exponential moving average in the Dow says, hey, wait a minute. When everything's looking so bad, why are you suddenly having a reflex rally that takes you back over the 9 EMA? Well, that's what we're going to assess and see what would happen if there's a decisive move into the 17,890s to 17,920s this week. What would happen if that holds? What happens if it holds by Friday? What does it do to the weekly charts, etc.? Well, so far, what we're looking at is we've got sectors that are starting to break down. We've got sectors that have made all-time highs and are just the absolute favorites that just constantly, anytime there's even an eye blink to say that we're not going down right now, we want to rally, those sectors are the sectors that rally, and that's really in the healthcare and the biotechnology area, and that's to do with takeovers, to do with a whole bunch of things. But when they start to fail and they're already starting to make lower lows and lower highs, that's going to be the cue to say, okay, now you've got your best of the best starting to deteriorate. What are you going to do about that? But the MACD and stochastic in the daily chart of the Dow, not that great. And it's suggesting that rallies should fail. All right, now let's do one other thing. I want you to just see. There's the VIX index, spiraled higher today, all the way to 1895, not above the 1980 high that was made on the 30th, but this is going to be very important. Where does it close? If the VIX index starts to trade into the low 15s or the high 14s, it's saying, don't be fooled. There's still a lot of energy left for buying. If it starts to trade higher and go right back by the end of the day towards not the highs of the day, that would take a huge amount of energy. But even if it just trades, the VIX index right now is trading at 1727. If it starts to get back to 1780 or 1810, that's going to say, whoa, selling is rife. Be really careful. All right, let's do the numbers. The Dow. Well, first of all, I have to just show you, because before I get rid of this chart, we've got the daily chart here, the 120-minute chart of the E-minis. You see how it spiked up there, single leg up? That MACD did cross positive, but the histogram is just fractionally positive here. It's going to be really important in the next hour and a half to 2 hours, whether or not 2067 is breached on the upside. It's at 2063 right now. The future's down 550. Or if the 2056 9-period moving average is taken out today. That's going to be a big negative. Now, let me move this 120-minute chart. Actually, let me make it smaller. Move it. Some of the notation will be there. Some of it won't. Okay, here we go. Dow, INDU, went from a minus 300 in the futures to positive, and now the Dow itself, the cash is down 41 to 17,688. The S&P, SPX.X, the S&P is down 473 at 2072. There, I think I gave the Dow a resistance. The S&P 2082 is a 9-period exponential moving average, just 10 points from here to 2088. That's really strong resistance. But 2092 is the weekly 9 EMA on the S&P, and it's way below that. So my suspicion is that we're starting to see lower lows and lower highs, and that's going to be the trend for a while. And watching 2051 is the 9-period exponential, the 200-period exponential moving average, and 2055 is the 200 simple moving average support. So getting below into the 2040s sets off a whole new thing, both in the weekly chart and the daily chart. Weekly technicals are just terrible. I just don't see how this market can rally at this particular point. But it's a monthly chart that's still holding above the 9 EMA, and we're going to be watching it closely. Let's get to the QQQ series. That's the NASDAQ Index 100. Look, it hit exactly 108.34 is the 9-period exponential moving average. Resistance, it went to 108.32, 2 cents off, and it pulled back. So watching it closely, a close anytime this week on a daily basis below 106.64. And the QQQ series says, watch out. Why? Because the weekly chart, the amazing up channel, inside track, Chapman wave inside track, propellant area will become a repellent area if you start to close below. And that's what I'm expecting should happen. I don't know if it will, but I'm saying it should. And the 120-minute chart right here in the corner, that says there's an H pattern that could be unfolding. Let's look at the IWM, which has been a laggard. Again, it's a laggard. It's down 18 cents at 123.60. And the weekly chart says that rectangle formation, that's a right arm extension failure in the Chapman wave methodology. And that suggests we should be coming back to retest the low at some point fairly soon. And that's at 120.24. 3 points to 3.5 points away. We'll see if that even happens. But that's going to change very much. The 121.38 level support in the 9-period moving average support in that monthly chart. And that'll confirm, probably not confirm, it'll suggest strongly that if in July there's no new high, that this candle here is going to be very significant as some kind of a peak E top, even if it's shorter term. Now, I'd like to go to NYA. I must look at the New York Stock Exchange. New York Stock Exchange, failing, down 68 to 10,795. Peak D in the weekly. Peak C. Now, there's going to be there's another way to count it. At least for this week, I'm going to still keep it as a peak C. If the New York Stock Exchange starts to trade at 10,600s, that monthly chart is going to be renotated with an instant restart as A, B, C, and we're at D. We've made a peak D. That's really what it looks like visually, but I wanted to be as strict as I could in the Chapman wave methodology for now, and that's the way we're looking at it. It needs 10,900 to 10,000 to 11,000, and it needs it within the next week and a half to be able to change the downtrend that's unfolding in the New York Stock Exchange. Let's go to gold. Gold right now is trading up 260 at 1166. It's trying to trying to break above 1172 is the 9-period moving average in the daily. But that weekly chart really continues to look like it's making the lowercase h that goes to lowercase m. And gold still looks very weak. Silver is the same thing. SI at this particular point, as we go to the break, silver is up 0.08. Working very hard. A little bit better pattern actually than the Dow, technically as well in the daily, but not the weekly. I'll be right back, and we're looking at the dollar, etc. as soon as I get back. Thank you, and hold tight. Dow's down 50.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. We're back. Actually, I'm just looking at something. It's really interesting. On Friday, there was a stock, even though we're negative, we've got shorts all over the show. Market scenario is deteriorating. There was a long position that we wanted, and we missed it by a penny on Friday. MNR, Monmouth Real Estate Investment, one of the oldest publicly traded REITs. And we missed it by a penny. I said to buy it at 980 because we want to trade the legs C and D and in the Chapman Wave. And it went to 981. It actually hit 1001, but it came back down and it went to 981. And then this morning, because of the market, I thought, I'm going to give it another day. Well, lo and behold, it really was a great-looking stock because this morning it hit 980, and then it went to 1002, and it's trading at 995 right now, up 9 cents. This is the thing that it's so difficult in a market like this to separate the good from the ugly because you don't know how the market could drag down even good stocks. And that was my only concern, and it had made a potential peak E/A in the 120-minute chart, right on that 200-period exponential moving average. So we didn't get it. Now I think to trade a D would be a little tough. I just wanted to show it to say that there are stocks right now, especially the under-the-radar type stocks that I think are tradable. So that if you want a mixed portfolio because you have a lot of shorts, but you would like to have something that looks attractive and long. My concern here only was that this is a rather low stock today. Look, it's only done 76,000 572, and on Friday it did 271, 232, day before 347. It has done much heavier for 500, etc. But it doesn't matter, because if it's in it's the getting out that counts. And if you've got a particular thing like a leg D, you can sell that on the rally to the D. So that wasn't really the issue. But I think it's important, and it's a lesson to me as well. I should have said, hey, don't be afraid. Everything about the MACD, the stochastic, was perfect. Now it's a little extended only in that these was my objective, and it could easily do that by pulling back a fraction from today and then doing it Tuesday or Wednesday. I mean, Wednesday or Thursday, just popping out. So that makes it a little tougher. But I wanted to show that there are charts that have technical good setups, and you should not be afraid. And, yes, I see that. I wonder what that's all about. So I had a question about the chart shows a couple of arrows there. They look more like those little flies that were bugging me yesterday. The little flies, I couldn't believe them. What the heck? They didn't want to get away. Eventually, they won. I went inside. But that's the way it is with flies. Okay, let's get back to our story. So now what I'm looking at is the IYT, which has been disastrous. Still today, down 14 cents at 145.36. The iShares, this is the iShares Transportation Average ETF, broke under very important support in the weekly chart. The peak F rounding top in the monthly chart is not a good looking chart. 120-minute chart did try for a rally, but it's kind of failing, so it's flattening out, even though the technicals were good. And look, the daily chart, let me do this, make it much bigger. You see this daily chart? This daily chart is showing you the rotation that went on for such a long time, just like the Dow. Let me look at this chart, keep your eye on it. And now look at this chart, keep your eye on it. See this chart here of the Dow? See this rotation that's gone on? It's almost as if there's been rotational selling. And as that rotational selling has unfolded, you've got what looked like really good rallies, but they were nothing. 17,600 to 18,100. What is that when you're looking at long-term charts? That's just nothing. And all of a sudden, you start to make lower lows and lower highs. Keep your eye on this. Here we go. Watch this. Now you're going to go to the next chart. See, there's that pattern at the top, that consolidation, the rotation within the transportation index. You had a rotation going on from the truckers to the airlines. The airlines led all the way up there, and then the airlines couldn't hold up as the truckers were having trouble, and the rails, of course, the rails just. I mean, look at UNH, not UNH, UNP, Union Pacific. There's that rotational pattern. Then blop, it looks like the IYT. Now, I had someone speak to me about this a long time ago and recommend to me, keep United, I always say United, it's keep Union Pacific Core on your radar and do a match with Pacific Core and the S&P, because they always go together. I said, really? So for years, I've kept them together. Let me show you something. Let me get out of this here. And I'm going to, in the break, I'm going to go and I'll show you what happens if you blindly follow anything without doing your homework. You can get into trouble. I'll be back straight after this message.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Dow's down 56, S&P's down 7. And I just wanted to show you, yes, United. I always say United. It's Union Pacific Coal. Union Pacific Coal in green. Here it is again in green. But I've also got the overlay of the S&P. This is the SPY. This is the SPIDER contract, S&P SPY, the red. And you will see that there have been coincidences, but in fact, the failure of Union Pacific since the high that was made back in the week of the February the 13th high, which coincided with 207.87, 209.84, with the high that was made also the week of the 13th of February in the SPY. Look, no, why am I saying that? That wasn't. I was looking at the wrong thing. Sorry. There it is, red. SPY is 207.87. Just want to make sure. It was a week later. Yes, 212.24. was a week later in the S&P, but then it went on to 213.78. So look at the divergence right there. It's a huge divergence, and that's the reason why you can keep things in mind, but it's more important to keep it in mind saying, hey, you have been a very good prognosticator for a long time. That might change, and I want to be ready for when that changes. So I will just keep it in mind. I'm not going to trade on you. I'm only going to keep it in mind. And that's exactly what I did. So that shows you that sometimes you can have some kind of technical tools that work, but they work at certain points. And so what I always say, you've got to have your huge Sears and Roebuck toolbox, because you never know when you need the Phillips screwdriver. You never know when you need the plumb line. It's just the way it works. Now, look, you've got the bonds made that, you remember we were talking about this in the Chapman Wave methodology, counting the notation, and how the triple yield chart with the 30-year in white, 30-year T-bond yield in white, has often gone to a D and then snuck to an E very quickly. Quickly being weekly charts, it could be 3 weeks or 4 weeks, or even a second week. And that's exactly what's happened so many times. Well, look what happened here. You went to a D at 32.22, pulls back. 1 week later, you go to 32.55. Let me just double check. Yep, 32.55. That's the week of the 26th of June. And then last week was a lower high bar making a peak. And now the week has just barely started. But so far, it is a peak E. It might have recycled. And that's going to be the big thing. If this recycles, and all of a sudden you see a move into the 33.50s, 3.35% in the 30-year T-bond yield, wow, that's going to be different. And that's going to suggest you got the pattern like there. It can go on for quite a few more weeks to the upside, maybe even a month and a half to maybe even 2 months as yields go high. I think that yields are going to remain fairly low. I think that the Fed is really being squeezed. They would love to raise. The market did it for them. They don't have to do a thing. They'd like to get it on the books that they were there raising. Just it's good diplomacy to do that. But you know what? They might not be able to do that because I think that there's a very weak economy here. Look at this chart right here. This is the chart of, let me move this away. This is the chart of the iShares Global Timber and Forestry ETF, failed under that up channel inside track support. It's now underneath it for the second week. Well, the week has just started, but it is the second week. And we'll see, because if it at 52.65 down 11 cents, if by Friday it closes anywhere near the 51.90 or lower area, that's saying, hey, this is not good. This is, again, the economy that's starting to fail. And you've got this pattern right here that, you remember we were talking about the wedge just a short while ago? Well, this is the rising wedge formation that very often produces, most of the time produces a cup that retests the top and then fails. Well, 238.32 was the Philadelphia housing sector index high, recovery high. It pulls back to 1863, runs up to peak A, peak B, maybe a peak B minus, we don't know, but not a new high. It's a gray B because it's under the previous high. And if all of a sudden, instead of being at 232 up 74 cents, by Friday, you're looking at this below 228, then there's a sideways to failure pattern. That lowercase h that turns into an M, lowercase m, that could be unfolding. I've already drawn it in there. There's the arch formation. So I'm going to be watching this real closely. So I suspect that we're looking at a situation where, in terms of the economy, look at the way Ford and General Motors, even Fiat, everywhere I go, I see these little Fiats. I was in one just recently, sitting at the back. That was a tight squeeze. Fun little car, there's no question about it. I remember the Fiat R-Boss when I was a kid, teenager. And they were coming out there with those Fiat R-Boss. The R-Boss was a sporty Fiat, but they were tiny. They were really quick, but you had to use all the gears all the time to be moving along because it didn't have all that much power. It had a lot of speed. It had a lot of torque, let's put it that way. It didn't have that supercharged momentum. Now, let's look at the Fiat chart. Look, Fiat's gone testing the 9-period moving, broke the 9-period moving average. Now it's testing the 200-period, the coral color, 13.80, and FCAU, Fiat Chrysler Autos, is trading at 14.05, down 24 cents. Now, I was asked about my Dow Quartet. So the Dow Quartet shows GE, whoops, not there, shows there. GE, Lousy action, just lousy weekly action. Broke the support level last week. This week it's trading under that support level. Monthly chart is okay in sideways pattern, but the daily and weekly are really not looking good. And that's not a good sign because GE is my Dow short-term indicator stock. Then you get IBM, just an old traditional stock I wanted there in my quartet. There it is, hanging towards the lows of its recent lows. Showing a little bit of strength coming back, but it hit the 9-period moving average and now it's stalled at 164.75, down 34 cents, way off the most recent line, the 170s, high in the 170s. You're going to be watching closely because if it breaks 162, closes under that any day, that's not a good sign. Triple M. Nice candle on the day coming back down 26 at 155.12, but the weekly chart says, hey, I'm going lower. I'm having a tough time. Monthly chart says, hey, I'm under the 9 EMA. I'm really having a tough time in July. So we've got to watch it because both Triple M and UTX coming up right now need to get not just 2 points, but about 4 to 5 points higher to really establish that they have a reflex action that could last not just a spike in a day or two basis, but a weekly, an arch formation that can actually hold the market up for about 2-3 weeks. So that's what we've got to watch real closely here. It's a possibility because they really are oversold, but they're not good chart patterns. UTX is my Dow more intermediate term outlook chart prognosticator. And in the daily, it's looking like a 1-to-1 to the downside. A to B equals C to D. It's already in leg D to the downside in the Chapman wave. Wow, that's not a B, a D. D. There it is. Okay, so that's that. So I looked at the IYT. I was asked about the IBB. The IBB, if you don't type it on there, you've got to type it over there. There we go. IBB is the biotech, the iShares Nasdaq Biotech ETF trading at 371.77, up $1.42. This is the place, this is the go-to place for fund managers to try to recover any losses that they're making anywhere. And some of them, I would not be surprised, have overweighted themselves to this index because it's been such a darling for them. It saved them. Look at this. Even in October when it plunged, it came right back. Even in, what was that, May? Yeah, May the week of the 1st, went down to 330 from the 374 area. That's 11, 12%, right back to new recovery highs. I think this is a peak E in the weekly. Peak D was made in the daily, and this is that Chapman wave unconventional flat base restart. Monthly still looks great. So we're short, been short for a little while, and I'm suspecting that it is going to fail. And if it breaks, the IBB trading at 371. If it closes under 365 any day this week, anticipate an acceleration to the downside. Now, what I wanted to do, I did this over the weekend. I didn't show it to my subscribers because I sent out so many charts. But I looked at this and I said, hey, what's going on with this commodity index? Reuters equal weight commodity index made a peak E in July of 2008 at 614s, comes slamming down to the 333 area, 323 area, runs up, almost doubles. Yeah, it does double, more than doubles to 690 in April of 2011. And then there's a slow, this is a slalom ride to the downside. Kabump, boom, kabump, boom, kabump. And it keeps making lower lows. It went below the trend line support. That is now resistance, this big, thick, transparent gray line. And now look what we've got. We've got a trough G/C, and I suspect we're going to a trough D under 407.21 at some point this summer, in July or August. And at this particular point, it could be real soon because this thing just doesn't want to hold any gains, and it keeps making this arch formation in the weekly. So it's trading at 427 down 5. And what did we have today? What did we see? We saw crude oil come down. Remember, we had our caller from the Back Bay. We had Jerry calling, and he's been a bear on this. And I said, in a rectangle formation can last a lot longer than your patience. Well, it lasted 1, 2, 3, 4, 5, 6, 7 bars, 7 weeks. And then last week it broke to a new low on Friday. And then today it's even lower than that. And that has to do a lot with the nuclear talks going on right now. we'll see what happens there. And let me just see. I wanted to look at, I think that's the commodities. Looked at the gold, looked at, why isn't gold moving here? Surely, with the Greek crisis, you'd expect gold to be screaming to the upside. No. So far, it hasn't produced what we call the financial bank crisis squeeze, not we call. This is what you could call, because there is a crisis going on, but it's just in a small part, and there is money that we know that the IMF would want to lend them under circumstances. Maybe it'll be the same amount of money, but the wording has to be different. It's all to do with the amount that's received and the sacrifices that aren't made. That's all. We'll see what happens. But in the meantime, gold has not participated. At Thursday to Friday to Sunday night, gold should have moved, instead of being 1166 right now, gold should be testing the not even 1178. It should be testing the candle high of the 29th of June at 1187 minimum. In fact, it should have broken all of the previous left side highs, even above 1205. It should be it should be testing the 200-period moving average of 1213. That could still happen because we are ready for another H pattern. And I had questions for the last week or so. What about the SLV? And should we be buying? Should we be selling? And I've been saying, if ever the SLV was in a rectangle formation, it's real clear to me parameters to watch. Let me just draw it for you. You just grab that high, you grab that low, you make a rectangle, and you say, if the SLV closes, not just trades there, but needs to close decisively below this low right here of 1480. In other words, if the SLV, the Silver iShares Trust, trading at 1501, up 6 cents right now, breaks to the downside below, I believe I was talking about the 1460, 1450 level. Let's go to 1450. A close below 1450 says you can rally at any point, but the breakdown that you've just had is suggesting that on a weekly basis, it's very negative action. And that would just be a bounce. But if in the next 2 to 3 days, SLV starts to break above 15, it's at 1502, closes above the high that we saw on the 18th of 1570, closes into the 1867 or higher area, all of a sudden you say, hey, that 1627 of the 200-period exponential moving average is game for the weekly chart to try to rebound to. That's the way I'm looking at it. So the question is, would I be buying the DZZ, that's short gold? Would I be looking at shorting the silver? Would I be exiting if I was long? And all I'd say is, SLV is acting okay over the last 4 sessions. Not great, it should be way higher, but it is acting okay. I would just put a stop. If I'm long, I'd put a stop in under 1480. I'd give it just a little tiny room, maybe 1473, because if it takes that 1480, I'm pretty sure it'll test that 1473 area. But on the upside, if you suddenly see a spike, and that means that the dollar is in leg E right now in the Chapman wave DXY, and that would suggest that the dollar is going to break down here. It made a peak C1, C2 top, and that it's not going to make a new high in this week. In fact, it's going to take out the low that was made today at 96.02, and it's going to then take out the low that was made on the 3rd. That must have been Friday. Yeah, Friday at 95.87, and all of a sudden you've got a pattern of lower highs and lower lows in the dollar. I'm just going to say at this point the dollar looks like the stronger currency, and I'm going to stay with looking at the dollar as the tide going to high tide at this particular point. But if it starts to break down, you'll know if you go to 95.30. Basil Chapman, I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
So, here we are. So, I had a question with Jen. I'm not sure if I got it right. Are you expecting UNP to spike to the high? No, do you mean UNP or UNH? UNH is the one that's near the highs. So, I'm not sure if it's possible. Excuse me. Excuse me. I'm not sure how that will work. Yes, it could make that leg D at any particular point. I just don't think it's going to go that much higher. That's all. UNH. UNP though is, if anything, it can have a counter trend bounce from here. So I hope I answered that question. More importantly, what I'm looking at is SLW. I'm pleased I did this during the break because I looked at it last night and I almost forgot about it today. Some of the gold stocks are actually starting to act as if they are attempting to make that transition from the down move to, at least in the short term, to a bounce. And that's going to be really important. Why? Because there is a potential bank crisis coming up. I'm just not sure right now how much it affects gold per se, because it's really a tiny country, and the way that the money's going to be handled, it's not going to all go out in an hour. It's going to be over a period of time. So anyway, I'm looking at this. I looked at, was it GG last night? Yeah, GG holding a nice candle, and then all of a sudden today, nice candle. So yes, there is a chance that we could, in fact, see some kind of gold pop to the upside. That's why I wanted to give those levels as very important. Let's just do this again. I said that I thought that gold right now should be up in the 112, the 12, 13, 12, 1200s at least. But it hasn't done that. But the gold stocks are suggesting that something's going on, and they're acting quite well for 2 days. And that's saying that gold might have to follow. But whatever it does, I'd look at specific gold stocks. And this is a period where I would not be afraid on a short, just as a trading vehicle, to take on a couple of gold stocks as trades. And you just don't get carried away. They're small positions. Why? Because it could be a counter and rally. And many times they've had these big two-session moves to the upside, and then they just fizzle. So we'll see. The only difference is that this time the stochastic and the MACD are coinciding to say sell, buy signal to buy mode, no, buy signal to good move in the upside in price. And this, so that's the stochastic. MACD trying to turn. As soon as it turns positive, it's going to give a buy mode in the MACD. So that means you have to get over 20% in the stochastic to get a buy mode in the stochastic. And then you wait to see if there's price movement to give you a buy signal in the price that goes to a buy mode. So all that I can say is that a push into the 64s is the 62.53, looking at Royal Gold right now. That would be a positive move, and say that candle could be tackled. And if you get even closer to the candle of the 18th, you've got to think that 65.72, 200-period moving average could be a potential. So this is just short-term stuff that I'm looking at, but it's very important. You cannot ignore it. And I want to just discuss, because I had looked at it last night and completely forgot about it this morning, that some of the gold stocks acted a little better than the actual gold and silver. Let's just look at PAS, which is PAAS. Yeah, that's really weak, but it is moving a little bit. PAAS is Pan American. So here we go. We're about to wrap up, and we're about to go to the Diagnostic Trading Hour with Daryl. So I'm going to just say to you, VIX index still holding quite well, up 60 cents at 17.39. Dow's come back, it's down. Now it's only down 34. S&P's down 5. All I can say, reflex action to the upside. But the VIX is the one that's going to tell me the story, because if the VIX makes a new high above today's $18.95 high by the close today or tomorrow, this market is going right back down to test the intraday lows that were made last night. But in the meantime, holding quite well. And if the VIX starts to fail by the end of the day and suddenly goes to the 1680s, 1650s, that's saying, hey, be careful, this rally, this bounce in the market could last a little longer as news filters in and out. Have a wonderful day. Thanks for being here. See you tomorrow. Basil Chapman, Tiger English is up. Check it out. A lot of charts this weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.